Hi everyone and welcome back to my channel. Lately, it feels like every time I wake up, there's a new headline about Trump's tariffs. Either he's adding new ones, removing old ones, or increasing the existing ones. And every one of these announcements sends the market into chaos. One day, the market plunges 5% on news of a tariff hike. The next day, the market is up 10% because the hike got cancelled or postponed. At one point, the S&P 500 was down more than 15% year-to-date, and now it's only down around 6%. The Nasdaq was in the red almost 20%, and now it's crawled its way back to under 10%. And honestly, I love it. Because for long-term investors like us, volatility isn't something to fear. It is something to take advantage of. When prices drop, we go bargain hunting. So in today's video, I'm sharing 3 stocks that I bought during this market roller coaster. I'll break down why I think they were undervalued and why, in my opinion, they have strong long-term potential. Let's get into it. So, stock number 1 is Google. I've held Google for a while now, but every time the stock price dips, I keep adding to my position. And this recent drop? No exception. So why do I like Google so much? Well, for starters, I think the market is seriously underestimating it. Since February, the stock has dropped more than 25%, which in my opinion is wild for a company this strong. A lot of people are saying, oh, Google is just a search company and search is dying due to AI. But if you actually look at the numbers, the narrative falls apart. Just last quarter, Google's search revenue grew 12.5% year-over-year, causing it to hit a new all-time high. Sure, maybe the growth rate slows down in the future, but Google, it's not just about search. We're talking about YouTube, Google Cloud, and a bunch of other moonshots under the Alphabet umbrella. I am especially bullish on Google Cloud. I use it myself, and honestly, in my opinion, the product is fantastic. And clearly, I'm not the only one who thinks so. Last quarter, Google Cloud's revenue grew 30%, and that's serious momentum. In my opinion, even after this bounce back in Google's stock price, the company is still undervalued. This is one of the companies I want to hold for the long haul. Now, I've already done a full breakdown on Google's financials and I calculated its intrinsic value. So I won't go over it again here, but if you want the deep dive, I linked the video in the description down below. Alright, let's move on to the second stock. Stock number 2 is VF Corp. You might know them as the company behind brands like Timberland, Vans, and the North Face. I've held this one for a while too, but wow, out of all of my holdings, this one has been on the wildest roller coaster ride so far. Right after Trump's tariff announcement, VF Corp stock completely tanked. The stock price dropped nearly 30% in a single day. And just yesterday, the stock price went up almost 30%. But even after this jump, the stock is still down 40% year to date. And that kind of volatility, you guessed it, I took it as a buying opportunity. Now, I'm fully aware this company is going through a rough patch, but in my opinion, this is a classic turnaround play. The market has beaten the company down, but I believe the core brands are still strong. And at this price, I see the company as undervalued. So let me walk you through their financials and explain why I see VFC as a compelling investment. So as you can see, yesterday, VFC did a crazy plus 27%. However, when we look into the year-to-date graph, we see that the company is down more than 40%. That said, over the last year, the company didn't do that terrible. The company is currently trading at almost $5 billion in market cap, but their enterprise value is over $9 billion, which basically tells us that the company has a lot of debt. But if we check the net debt to EBITDA ratio, it's 3.13. We would prefer to see it under 3, but this is not a terrible metric. They have a pretty normal return on invested capital of 7.4%, and as you can see, over the last 12 months, the company lost money as their PE ratio is negative. However, their forward PE ratio is under 13, signaling a turnaround. Looking at the company's revenue, we see that over the last 10 years, the company's revenue was basically flat. While we would prefer to see growth, it doesn't mean that the company can't be undervalued. Now, when it comes to net income, as you can see, for the past 2 years, the company has been struggling, even losing almost $1 billion last year. However, their average profitability is around $1 billion. And if a company would be able to come back to the standard around $1 billion net income, this would make the company trade at around 5 PE ratio. Another thing I like about the company is the fact that they see themselves as undervalued and they keep buying back shares, as they went from 440 to 388 million shares in just 10 years, increasing my share of the company along the way. Looking at their free cash flow, we see a similar picture as we did with net income. The only key difference I see here is that last year they actually had a positive free cash flow, signaling that the turnaround has already started. Now let's look at the analysts' estimates and let's see how they think the company will do in the near future. For revenue, they see another dip this year. However, they see steady growth for the 4 years after that. For net income, they see profitability this year, and they see it growing to around $1 billion in the next 4. And we see a similar picture when it comes to free cash flow. Now look, VF Corp isn't the kind of stock that gets people hyped up with promises of extreme growth and flashy tech, but that doesn't mean it's not a moneymaker. As I said, this is a textbook turnaround play. If a company manages to get back to steady profitability, I sincerely believe that it could double or even triple over the next few years. Alright, let's move on to the third and final stock I bought this month. Stock number 3 is Nvidia. Just like Google, I made a full video on Nvidia recently. I broke down its financials and ran an intrinsic value calculation. And honestly, their numbers blew me away. No debt, massive growth, and their valuation surprisingly reasonable. Back when the stock was trading at around $170, I thought, okay, if Nvidia even comes close to hitting the analyst growth projections, this could actually make sense. And then the tariff chaos came in. The stock price dropped all the way to $87, and that's when I jumped in. I started a small position just below 1% of my portfolio when the stock price dipped under $90. But of course, it didn't stay there long. It bounced back fast, and now it's back to around $115. Just yesterday, the stock price jumped up nearly 20% in a single day. And honestly, I hated that. I was ready to load up more if it stayed low for a little longer. Still, even at these levels, I think Nvidia looks like a fairly priced growth play with a lot of potential ahead. If you want to see the full breakdown, the video is linked in the description down below. It was actually the first time I looked at Nvidia and thought, okay, this actually finally might be fairly priced. And with that, these are the 3 stocks I added to my portfolio during this wild ride in the market. Each one is different. Tech giants like Google and Nvidia with strong fundamentals and serious upside potential, and then VF Corp, a riskier turnaround play. But one thing to keep in mind is the fact that they all have one thing in common. They all dropped to a point where I thought the reward outweighed the risk. Lately, the market has felt more unpredictable than ever. Massive swings, sudden sell-offs, and unexpected rallies. But instead of letting the noise shake me, I've been using it to sharpen my focus. Because while short-term chaos makes headlines, long-term investors know the real gains come from staying calm, staying curious, and staying invested. Of course, I'm not buying everything blindly. I'm still running the numbers, checking valuations, and looking for that margin of safety. But when great businesses go on sale, I'm ready to act. And so should you. So tell me, have you acquired any interesting positions during this market roller coaster? Or are you leaning into fear and sitting back? Leave your comments in the comment section down below. If you enjoyed the video, consider supporting the channel by clicking the like and subscribe buttons. And as always, guys, thank you for watching, and I hope to see you in the next one. Bye.